All right, it is CPI day, although this time we're going without the CPI.
So today we were supposed to get the inflation number to then figure out what the heck's the Federal Reserve going to do. So if you're a home buyer, you're a homeowner, you're trying to figure out where mortgage rates are going, what we're going to talk about today in today's video is mortgage rates. That's it. We're going to talk about basically two pieces of the puzzle that the Federal Reserve monitors. That's jobs and inflation. So without further ado, folks, I'd love to go over to this rate through here and explain to you guys what's going on with the rates. And my whole goal by the end of this video is to help you understand what the heck's going on with those and the whys behind it. So let's get over to CNBC. They have an analysis today of kind of where they think the inflation numbers are. And they're going to give us a lot of data on this. And then when they finish, I'm going to go with that. I'm going to show you the things that the Federal Reserve really monitors. Then we're going to break down the jobs report. We're going to go through several analyses on that. And then what I want you to do is help me down below come up with where you think mortgage rates are going to go. Are they going to go up? Are they going to go down? Or are they going to be flat over the next week? So without further ado, let's take it back to Becky over at CNBC and see what they have to say about the inflation numbers.
Our senior economics reporter, Steve Leisman, takes a look at what the alternative inflation data the Fed is kind of surveying at this point, what choices they have among those. Steve, we're probably never going to get that CPI data.
No, the White House said yesterday the CPI and the jobs data from October may never happen, or at least are unlikely. But among the alternative data that Fed Chair Powell is looking at, that he said he follows, was State Street's price stats. That scrapes millions of retail prices off the web and calculates the change on a daily and a monthly basis. It has crept up, you can see here, slowly since the president put tariffs in place, gaining nearly a full percentage point since May and underscoring the caution of some Fed officials, more about that in a second, about cutting interest rates. The good news is it's been stable, you can see there, for the 2 months. The bad news is it doesn't include services. Well, the data series itself, you can see, tracks pretty closely, or the BLS headline pretty closely, though it has run a little cooler than both since the pandemic. Yesterday, Atlanta Fed President Raphael Bostic said he opposed the December rate cut in part because of survey data from businesses that his bank gathers showing intentions to boost prices. Bostic, who is not a voter and announced his intention to retire in February, said he also saw inflation spreading to those core services. CNBC now counting half of the voting members at the FOMC as either outright against or cautious about a December rate cut. Let me go through it here. Boston Fed President Susan Collins, she joined yesterday KC President Jeff Schmidt, who is likely against a December cut, having dissented at the last meeting. That's on the left there. Presidents Goolsbee and Musalam and Governors Jefferson and Cook, they've all suggested going slowly or a cautious approach to a December cut. Governors Myron, Bowman, and Waller, they're presumed to favor a cut, perhaps along with New York Fed John Williams, though he's less certain. And Fed Chair Jay Powell, I'd say right now, is unknown. Well, before Collins spoke yesterday afternoon, markets had a 64% probability on a December cut. That's now fallen to a coin toss. There's still a 69% probability of a cut by January. So what's it going to take? Likely clear data on a weakening job market and stable or declining inflation to convince the hawks to cut in December. Becky?
Okay, so he went over the inflation piece, and we'll get data from the markets and all the data centers from this. So now let's get over to the other piece of the puzzle that the Federal Reserve monitors. Because again, folks, if you're trying to figure out this, if you're looking to buy, maybe you're looking to refinance to save some money. Well, if you are, go to my website over through here. I created this tool right through here for you. And actually, just put in your mortgage information and what rate you'd like to refinance. And when it hits there, I'll reach out to you. I don't sell the data. Most likely, it's going to be me personally reaching out to you. But here's what they were saying. They're saying, okay, at the next Fed meeting, which is in 26 days, what the Federal Reserve is going to do. Now, we've been doing this every day, and I know you probably got on some of you guys' nerves, but look now over here. There's now not even a 50% chance of a rate cut right through here. So they're saying at the December meeting, rates are going to stay right where they are. Okay, so let's dive into this data. We got the inflation numbers. We really don't know what they're going to be, but it doesn't look like they're going to skyrocket, but have all the manufacturers put in their price increases yet? We don't know. But then we come over to here, and this is the reason why the Federal Reserve cut at the last meeting. So let's dive into it and see the data that we've gotten on this piece of the puzzle since the government shutdown. So one of the pieces we got was the Challenger report. I don't know if you guys remember this. This was on November 6th, just last week. And it said that there was a 153,000 new layoffs in 1 month, a 183% increase. And that spooked the markets. But then you have ADP coming out, and they're saying, okay, the market isn't strong, but it's not falling off a cliff. But then you have the Federal Reserve of Chicago coming in and doing their own analysis, coming in saying, well, the unemployment rate right now that they're coming up with is 4.3. And then if you go over to where it is today, based on the numbers that they're looking at, it is 4.3. So if you don't have inflation skyrocketing and you're still waiting for it to come in, and you know it's going to probably go up a little bit, and you don't have the jobs market falling off a cliff, and you're sitting on the Fed, would you cut? So that's the dilemma that some markets are facing right now. Until we get the data, these are the pieces of the puzzle we have to figure out. So if you're out there, you're trying to refinance, I got the tools for you. But if you're looking to buy, let's go through this and see what you should do to protect yourself. Okay, so if I'm looking to buy, the first thing I want to know is, what kind of rate can I get? Well, talking about rates, I want to break it down for you, because if you start looking, and you probably have so far if you ran across my channel, what is the 30-year fixed rate? And you're going to get rates all over the board. And then you're sitting there thinking, well, what is it? Well, let me just go over. Here's what I did, and I do this every so often. I plugged in, what is today's best 30-year rate? Just give me a couple of them. Here's what it finds. Mortgage News Daily is at 6.22. We have bank rate at 6.24, and we have the 30-year fixed on Forbes at 6.3. Well, Mortgage News Daily, last I checked, it wasn't a bank. It was basically a data center where they survey lenders all over the country. So that's not a real rate. It's an average. Bank rate, not really quite sure if that's actually a bank or not. And then I know Forbes isn't. So what are these? It's marketing. So what do you truly qualify for? So that's the first thing you really have to understand. Then you need to, really dig down into the other data fields that we monitor on a daily basis. But if you're out there trying to figure this out, let's get over to so I can give you some help. If you're a loan officer, maybe you're a realtor, even somebody looking to buy or refinance, hopefully you can subscribe down there, and every time I come up with a video, if it sounds entertaining, watch it. You might just learn something. But let's help those out there that are looking to buy, maybe in the next 30, 60, 90 days, because contracts are really picking up. And then if you're looking to build, what's the long-term duration of this looking like? Okay, so if you're looking to buy in the next few months, just call us, get a consultation. What we're going to do is we're going to go through your budget. We're going to go through your credit. There might be some credit glitches on there that we can fix and boost your credit scores a little bit. Maybe that could be. And then most of all, we want to make sure we find the right product for you. So that's the main concerns you need to be in. Then what we do is the slogan that I have, and it's one application, one credit pool. We're going to compare your loan with over 30 different lenders. So let me explain to you what I do. My name is Dan Frio. I come in here each day to explain all this stuff to you. I'm actually a loan officer. I'm licensed in all 50 states as well as Puerto Rico. The bank I work at, we're set up with over 30 different lenders to make sure when you call in, we're giving you the most competitive rates and the lowest fees in the market. Because what we're going to do is we're going to pool rates from the top 30 banks and lenders in the entire country that we work with and we have a relationship with, because I can use their products and their rates. So how do you get involved with this? Go to the rate update. Schedule a consultation to learn a little bit more about it. If you want to put in the application, great. We'd like to know a little bit about you, and I'm sure you'd like to know a little bit about us. So schedule a consultation. Give us a call. Even there's a button right above my head that says Ask Dan. Check out any of those and reach out to us to help navigate you into home ownership. If you're looking to buy, looking to build, we'd love to help you. If you already got a quote out there, you want to check and see, we can check that lender with the other 30 lenders we use. We'll just upload your loan estimate right there. What we're going to do is we're going to do a video showing you all the rates that you qualify for. We're going to show you the lowest one with the lowest fees. And if we beat them on the fees and the rate, I'm hoping to win you as a client. So thanks for watching. I hope you learned a little bit about something today. Mortgage rates, they are up a little bit today. My goal here, my top end on rates, was rates between 5.99 and 6.375, and we're back at that top range that I've been looking at. We keep hitting it and dropping back down. So try to check in before these rates go up any higher. Reach out to us. We'd love to help. If you need some more information about this, please make sure you subscribe and watch me each morning at the opening bell to figure out what happens with these each day. Thanks for watching. Can't wait to see you tomorrow. Bye-bye.